Well, good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Thursday, the 8th of August, 2024. Couldn't put out an update this morning. Sorry, had other things going on. But I'm here tonight for you. Now, we've got to talk about a few very important things. Today, we saw the unemployment claims come out, and they dropped rather sharply. Then, if you go in and you saw the reason that they fell, people went back to work in Texas, Michigan, Missouri. Do you remember when they did the last jobs report? I did a special report that is there on YouTube. Go Ira Epstein and go down, you'll see the report there. Take a look at what I said. I said that, the market is not understanding that a lot of those jobs, if you think those 450,000 jobs were lost, I don't. I think they showed up there because Hurricane Beryl and other storms were going through the Midwest, going through Texas, obviously. And in parts of Michigan, you also had people with the retooling of automobiles. That's an event that takes place all the time. And as those plants do their retooling, certain amount of people, they do it in stretches, get laid off and so on, but they come back to work. So with the jobless claims falling, it gives credence to that. Do I know that it's exactly right? Yeah, well, time will tell, but I think I was on to something. I also took the stance that no, I don't think that the Fed has to go with an emergency cut, number one. Number two, certainly not 75 basis points. It would almost send the word of panic, and the Fed's not going to panic. If they're behind the eight ball, they can go 50 points in September, 75 after that, or 50 or 25, whatever they're going to do. The data's going to tell them. But if you think you're going to get an emergency out of them, with everything we see today, and I want to be very clear, all the data on the table today, I don't see that happening. When we look at the gold market on a weekly chart, the market is still staying here at all-time highs on a closing basis. You do see that. Very impressive. When we look at this chart and you put swing lines on, the game changed today. Now you have higher lows and a higher high with today's action. So you're back up into what's defined as a bull trend, higher highs and higher lows. Now the key to the uptrend is the 18-day average of closes. The market has to be over it, and it is right here. So what I think you're going to do is you're going to see traders buying the market. It's my guess. 250, 2450, 480. Stops right under the lows here that we made 2 days ago, and give it to you exactly where it's at. We can do it. Come on. There you go. Thank you so much. This low. 2418. And from there, what I look for the market to then do is see if it can hold that and work its way higher. Now, what's the definition of higher? If you put the Bollinger Bands on, it's wherever the Bollinger Band comes in. Currently, it's at 2508. That number's going to drop even further because this action has basically been sideways action. And it takes into account in the algorithm how that works. I've worked with this algorithm for decades, so I feel that I have a pretty good feel as to what it can do. I even built a system once where I can put in fake data, and you can do it on our charts, by the way, and extend them on the charts, this service, and create some data for yourself in that feed and see what they're doing. So it's the what-if scenarios. It's an interesting thing to do. So as I looked at that market now, that's what I'm seeing. And momentum-wise, you're pointing up. So I'm not saying it's the strongest signal in the world, but I am saying it's re-entered the bull camp and possibility of getting there. The gold-silver ratio is coming back a little bit. It looks as though what's going to happen here is that we're going to see silver maybe gain back a little bit on the gold. Wouldn't surprise me. Let's understand where it just came from. Under 76 ounces, and it went to almost, 88 and a half, 89. In fact, we can get there. Why don't I just take you? I'm not going to guess it. We got up as high as 89 ounces. So you went up to where you needed 13 more ounces of silver to get 1 ounce of gold. It's overdone. It's in an area that it's had trouble with in the past, all right? Doesn't mean it has to crash, but I'm looking for it to get stronger. And you can see that the market's fighting a battle. Now, if we can get more of a lift out of this, then you might be able to get up here. What else? Did we ever embed? That's the thing that we should look at. Both numbers were not under 20 there. Both numbers were under 20 there. They were under 20 there, but probably not the day before. So all you did is get oversold in the market, and you held the 200-day average in the Bollinger Band, the first test of it, and you're bouncing from there. That's how I view the market. In the copper, it's still a sicko market. You can see how the market's got now, the 18-day has gotten under the 200. So rallies up to that number should be a lot of resistance being seen in the market. You still have an embedded reading. Rallies are probably going to be shallow in the market. In the platinum market, if you rally back up, look at how you've got this market set. You've got, for the first time, the 18-day average just got under the 200. So just like we've got in the copper market, a lot of resistance building there. Not an embedded reading, just an oversold market that's correcting, but I wouldn't have a lot of hope and prayer that it gets through that very easily. In the dollar index, a bounce, okay? Is this no more than a bounce? Well, we'll find out. But a lot of resistance, 103.60 to 103.70. That's where I would assume the pros are going to wait and try to sell the market. Stops over this high to see is the bear trend actually grabbed on. I'm not saying it has to get there. I'm saying if it does, that's what I think the pros will end up doing. So it's going to be an interesting day tomorrow. I'm going to remind you that, everything you see me doing here, I teach in my charting course, the swing lines, the moving averages, the slow stochastics, Bollinger Bands, and window envelopes. Window envelopes are, the way that I do them, a little bit different. What most people do is they'll look at them and they'll take a percentage of a move from, say, the 18-day average, and they'll extrapolate it out. I found a better way to do it, for me at least, using swing lines. So it's all new videos. There's 45 of them in the course. You get the charting software. You get the videos to teach this. As I said, 45. You get full research access to everything I have. It's a pretty neat deal, and you learn how to trade. At the end of the summer's here for some of the people. This is one of the methods you learn trading. I'm not the only one doing it. You can try other things out there. I invite you to. But you'll find my course isn't thousands of dollars, as so many of them are. You get a lot of value for it. So you go to iraepstein.com and look at it. It's under iraepstein.com under the word courses. Logical spot. You can move your your cursor up here, your cursor up there and take a look. I am hoping to do tomorrow the weekend videos. If nothing stops, they'll be out. I have to be gone Saturday and part of Sunday. I have a good friend that's going to try to set the world record for a Lamborghini on a half-mile course, straight course. He's got 3,000 horsepower in this car. It's a real Lamborghini, folks, okay? Certified by Lamborghini and all. And he has to go over 260 miles an hour from a standing stop in that. He's hit 259, so we'll see if he can do it this time. I'll be there. You have a great day. I'll see you tomorrow morning with my updates. Take care.